Wonderful. Well, I know we'll have more people joining, but we'll just go ahead and get started because we've got some really great information to cover today. We're so appreciative that you're here. My name is Ellie Burns, and I am the Senior Director of Nonprofit Relations with the Community Foundation of Greater Des Moines, and really just excited to have our fourth of the series, Ask the Expert, and to welcome Tammy Armstrong. Tammy is the owner of Little Data Solutions, and she brings over a decade of experience in analytics, reporting, and visionary leadership. She's passionate about helping teams articulate their vision and mission, develop their strategic plan, and select systems and practices to execute those plans flawlessly. She's really experienced in KPI and report development, and Power BI is her happy place. Tammy is also an active volunteer and serves as the president of Des Moines Data for Good, which is a 501c3 organization that connects nonprofits with local analytics volunteers free of charge. We have welcomed some of our amazing Data for Good partners to do a few trainings for us in the past, and we always really love their words of wisdom and their ability to help our nonprofits. It's such a great resource in our community. Tammy's also a member of the nonprofit consultant network Heart of Des Moines and has served on panels and presented on analytics and data storytelling for local and national audiences. She is an avid baker, crafter, and gamer and lives in Des Moines with her husband, daughter, and their two cats. So we're so happy to have Tammy here. As a reminder, she's just going to spend some time providing some information and going over some helpful information for you all, and we're going to record that portion. And when she's done, we'll pause the recording and just open it up for questions. But that said, if you've got questions as you go, I know Tammy's happy to entertain them throughout the presentation. You can throw them in the chat box too, and I'll try to monitor that and just pipe in if I see anything. So I will stop talking now and just say thank you for being here, Tammy, and we're excited to hear from you.
Thanks so much, Ellie. Thank you for having me, and thanks everyone for being here today. Fundraising, data, and compliance aren't always like the sexiest, happiest of topics. So I applaud you all for coming out and hearing me chat. A lot of times when I work with my clients, one of my clients, I believe lovingly has nicknamed me the legal beagle. And I'm not a lawyer, but I am the one who asks the annoying questions and points out the annoying, like, well, no, you can't do that. That's a raffle. You can't. I'm glad to share what I've learned over the years, especially as we talk about uncertain times and with things going on in the administration and financial uncertainty. There could be some increased scrutiny. We want to be careful with how we're using our dollars and how we're interacting with our donors. And so I'm going to talk about some of those best practices for audit readiness, for compliance with the IRS. And while these are things that you should do from a compliance perspective, they also have added benefits for improving your fundraising results as well, and the power that you can have with your data. So Ellie already gave me a great intro there, a little bit more into specifically the fundraising data part as well. So before I went back to grad school and got my master's in analytics and really dove deep on analytics, I grew up in nonprofit fundraising and database management. So Razor's Edge was kind of one of the only games in town at the time, and really diving deep on cleaning up databases, having process and procedure documents, making sure that gifts are being entered correctly and stewarded correctly, supporting financial audits, a lot of experience in that area. And now that is also what I work with my clients on in my business, as well as all of the analytics and reporting work that I love to do. So we've got a lot to cover today, so we'll skip past the who am I piece a little bit and get into, again, the meat of why data management is essential. And I call out that I think it's always essential, but particularly as organizations grow. So a lot of the organizations that I talk to are at some stepping point from maybe hiring staff for the first time, or hiring a development person for the first time, or embarking on a capital campaign. Maybe they're doubling their staff, at whether they're starting very small or they're medium and going bigger. When you have that level of growth, your processes need to keep up with that, and your operational work needs to keep up with that in order to continue to support compliance activities and keep everything above board and on the level. So especially when you go from being a quite small organization to medium small organization or beyond, we find that relying on memory is no longer a sufficient tool. A lot of institutions have that founder or that board member or that even admin assistant who has been there since the beginning or a really long time, and they know everything, and that's a great resource, but it's not sustainable in the long term. Um, it's especially for managing a larger workforce, right? You can't just keep pinging that one person. You need to be able to replicate that brain across more people. And oftentimes our databases are the way to do that, the records that we keep on the fundraising side. As I mentioned before, we have some increased uncertainty in this environment. That's part of the point of this series. And when I think you just can all feel better whether or not things actually come to a head for a majority of nonprofits. Just knowing that you are dotting your I's and crossing your T's, I think, is more important than ever. Um, Back to the idea of growth as well. Maybe you're crossing that threshold from a grant application perspective or a revenue perspective where you need to start having annual audits and external audits. And so getting prepared for that, really important as you grow. And of course, it enhances our, as I'll get to later, doing these important activities is not just a matter of avoiding pain and avoiding regulation issues or things like that. It also can enhance our fundraising efforts. And so there's a carrot as well as a stick there. Some of the sticks are the organization risk. And I'll caveat this by saying it would take quite a lot to get to this point. But technically, the IRS says if you are, say, issuing incorrect receipts, and this really falls under the quid pro quo heading that we'll get to later, but technically you can be fined up to $5,000 per mailing or event if you're issuing those receipts incorrectly. I think most orgs are unlikely to have that scenario, even one way or the other. But it's also just good data practices to help you raise more money. From a donor risk perspective, donors can be fined and convicted of perjury if they are filing their taxes and claiming something as a deductible gift that isn't, claiming donations on their tax returns that they shouldn't be. And that isn't necessarily a malicious activity. It could just be, well, you sent me this letter and I misunderstood, or, they don't have the documentation that they need. So we're going to get into how we can support our donors. We are not their tax advisors. We cannot tell them what is deductible and what isn't, but we can provide and we must provide certain documents to support them in that process. And of course, just giving donors bad documents is a bad look. It doesn't feel good, even if it's not what we legally or technically have to do. If you ever have to have that conversation with a donor, that's not the position that you want to be in. And then my footnote there, I again am not a lawyer. This is me sharing my experience and my expertise, but always encourage you to talk to your lawyer and or your compliance team to make sure that you are, your auditors, make sure you're doing everything the way you need to. But I think that covering these topics and these best practices can help you understand how close or how far you might be from that, how much work you might have to do. So there's three major areas that we're going to cover from this compliance, audit readiness, and fundraising success perspective. Reconciling for audit readiness, documentation, what documentation do you need to have and provide, and how to prepare that, and cleaning your data. And then at the end, we'll do a very quick health check and talk about some a self-assessment that you can use just to kind of see and gauge how well you're doing. We'll dive right in with reconciliation. So we cover this first because this is the item that I most frequently find nonprofits struggling with. It can feel really daunting. Maybe they try to reconcile and can't get their numbers to match, or maybe they don't feel like they have the time to reconcile, so they don't. Um, and again, that can really come down to a maturity of the organization size and whatnot. Um, and when I say reconciliation, what I really mean is cross-referencing the fundraising software with the accounting software and making sure that either they match or we can explain the differences. And we're seeing what we expect. Software in this case could be two different spreadsheets. And again, really comes down to how your organization is structured. But you really want to have those two different perspectives, and we'll get into that. When we think about reconciliation, there are a couple key factors. Who does it? Finance and fundraising personnel. So that you may not have distinct departments in your organization. It may just be having two representatives who kind of wear those hats that day. But it's really important to avoid cross-pollinating that too much if you can, just so that you can have some objectivity to say, well, this is what the accounting software said. This is what the fundraising software said, and try to approach those and reconcile those separately. Again, what you're doing is comparing the donations listed in those two systems. You're not looking at expenses. You're not looking at all revenue. It's really just those donation pieces. Maybe some revenue when it comes to things like, if you charge for events and some things like that. But in general, it's that fundraising and development revenue. You should be doing this at minimum at the end of the calendar and fiscal years if you're on a non-calendar fiscal year, because that will help you with your audit if and when you get to that, as well as the year-end tax receipts that you should be sending to your donors. So you want to make sure that you are clear on those numbers before you issue those. Ideally, you want to do this at least monthly. Some institutions do this weekly or even daily. How often you do that really depends on how frequently you get donations. If you're not getting donations every day, it's not going to make sense to reconcile every day. If you get a couple a month, monthly is just fine. The longer that you wait, the harder it actually ironically is, right? So even though you're doing it more frequently, you'd think that that takes more time. There's just going to be more opportunity for discrepancies and harder to, again, go back to your memory, find the documentation and say, what was that supposed to be? Is that in the right place? And we do this to ensure that we're putting things in the right place, that, okay, maybe we agree on the total dollars, but finance put it in this scholarship fund and development said it was unrestricted, or vice versa. We want to make sure that we're allocating the funds, we agree on that. We're also making sure that nobody's missed something. So maybe a check made its way to accounting, and finance development never heard about it. Fundraising never heard about it. Didn't even know it came in. Didn't get the chance to thank that donor. So it provides those checks and balances. And again, it prepares the organization for a smooth audit. Every time you reconcile, you're doing almost like a mini audit, to a small degree. And when you get that out of the way, you're not catching up at the end of the year. Some people might ask, well, why don't we just use the accounting software or QuickBooks or whatever as the source of truth and not even care about what's in the fundraising software? They both track the dollars, and often we think of, accounting as having the really buttoned up numbers, but they have distinct purposes, and it's really important. They're both important purposes that the other one can't achieve. So when we track things from a fundraising perspective, and we'll often call this a CRM, and there's so many products out there. Again, you might just be using a spreadsheet if depending on your size and your needs. But you need to be tracking things like quid pro quo benefits. So for example, let's say you have a fundraising event and you're charging $500 per seat at a table. and $300 of that is charitable. The other $200 is the dinner and the experience and the drinks and everything else. That's the fair market value of that. You need to be enumerating that in a certain way back to the donor when you issue their receipts, and we'll get back to that. You might be tracking pledges that accounting can't book because they are verbal. Maybe they're same year and finance doesn't want that on their books. Um, you're also going to be tracking things like, what does the donor care about? What activities do they like? What's your history with them? Have they served on your board? If you're a school, what year did they graduate? Finance is never going to have that in their system. And if they do, heaven help them. That's a lot for them to keep track of. Why would they be doing that? It's also your strategic and tactical software for figuring out how you're going to go after fundraising goals and things like that. Mailings that you want to send out, and you want to send out different segments. What's the performance of that? Finance might know how much you spend on it. They'll figure out how many dollars you've raised overall for the year, but they're really not going to be tracking, well, you got these dollars from the fall mailer and these dollars from the spring Facebook appeal. They're not doing that. Accounting software is also tracking all your non-donation revenue, tuition, program fees, and so forth. They're tracking your expenses. They're tracking financial reports. They're managing your budgeting process. They have to adhere to GAAP standards, generally acceptable accounting principles. So really the only area they overlap is that donations piece. And again, we're tracking two things or one thing in two places. So we need to have checks and balances and make sure that we agree for audit perspectives, make sure that each tool is able to serve its purposes by making sure one's not missing something the other one has. And I'll be a happy united family. So how do we actually reconcile? It's mostly a 4-step process with a little loop in the middle. You need the finance team or person to pull from QuickBooks, and the fundraising person to pull from your CRM or whatever your fundraising tool is, their versions of the same 3 pieces of data. You want to know the total gifts that you've gotten by each fund for the reconciliation period. So let's say you're always doing it on a monthly basis. So it's the beginning of June. I'm going to look back at May and say, okay, we raised $10,000 in unrestricted gifts. We got $2,500 for scholarship, and we got $500 in pledge payments from our capital campaign that ended last year. We want to make sure we agree on those totals and the fund distribution. You're going to have a gift detail. So for each of those figures I just mentioned, what were the individual gifts and donors and dates that made those up? And then a year-to-date summary. So, we're in June, maybe it's a July to June fiscal year. So in addition to looking at May's results, I want to know July through the end of May, what those totals are. And even though we're doing this monthly, it is possible for historical journal entries to happen, right? Or pledges to get written off and adjusted, or different things to happen. So you just want to make sure that that historical data hasn't changed. And there are some discrepancies that are totally acceptable. It's okay if QuickBooks has a donor name a little bit differently than fundraising has it. It's okay for development to have some pledges that finance doesn't, as long as those discrepancies are within what's expected and can be explained by how you each work. Someone needs to be responsible for going through the 2 versions of the reports and flagging any discrepancies. So that's step 2, is that comparison. And if you say, oftentimes you'll just find that they're timing discrepancies, right? Development got the check on May 31st, and it didn't hit the books until June 1st. But again, these are wonderful things to catch in June or in December, and not in front of your auditors. You go back to your documentation, which we'll get to in the next section, and explain those discrepancies. In step 3, you're going to correct those discrepancies if they need correcting. So changing the post date on a gift in that example we mentioned. And then you're going to go back and you're each going to rerun those reports, right? And say, okay, we made that change. And now let's make sure that that actually fixed what we thought it would, and that we have a clean run of reports. If you find that there's more things that have come up in that process, then you continue that cycle until it's clean, and then you get to step 4. You're done. You close the books. You consider it reconciled. You have a little party, and then you move on. You don't have a little party unless you really want to. So that's reconciliation. I hinted at documentation. This is the next probably most annoying area for most organizations. It's almost like the concept of technical debt. It's something you know you should do, but it's kind of a pain in the butt to do. But if you don't do it right away, it's an even bigger pain to try to go back and reconstruct. When I say documentation, there are 2 major areas that I mean and that we're going to cover today. There's a third bonus area that we don't have time to go into today. But one is basically the documentation we get from the donor and about the donor and their gifts. And the other is the documentation that we send to the donor about their gifts. And we need to have both be consistent, sustainable, and findable. And then to meet some certain criteria. The third one is the bonus is your policies and procedures. Those are really the backbone of making these other 2 things happen. And that's a whole other thing we could get into. Your auditors are less likely to ever really ask to see those. So we're not going to get into that as much today. But again, to make things sustainable as you are listening to this and thinking about this and adopting this, write how you do it so that the next person or the next time you do it consistently. For donor documentation, a couple key things that you'll want to measure. And this is, for the average gift, it's going to be pretty simple. It's when you start getting into more like restricted gifts or capital campaigns or naming agreements and things like that, that it gets a little more complicated. But generally speaking, we need to know, what was the donor's intent? Were they just making an annual fund gift, or were they trying to direct it to a specific program, a specific department, or something like that? Were they trying to restrict it? If they're trying to restrict it, then you want to make sure that you're capturing that information. So maybe that's a letter that they sent, maybe it's an email. It could even be conversation notes that someone on your staff takes down. Gift and naming agreements, of course, are great to keep track of, and necessary to keep track of. It could even be your solicitation materials. So if you sent out a mailer or an email blast and you said any gift made in response to this through this online form is going to go support left-handed students from Cedar Rapids, then you need to be tracking all those gifts as that very specific restriction, because you implied that intent on their behalf, and you need to be tracking that you're actually spending those dollars that way. Again, it kind of depends on how in-depth your auditors go, but I have had auditors ask for all solicitation materials as well as things like, just pledge documentation. Who's the donor? To some degree, we can guess at this. Sometimes it's crystal clear, sometimes it's not. But really, who is the legal entity making the gift? Usually that's the person writing the check or the person whose name is on the credit card. But we've maybe all been in a position to have a business credit card that has our name on it, but is really part of an organization, right? It can be hard to know. Oftentimes we're explicitly told if somebody is giving through a donor advised fund, and you get, maybe a lot of us have gotten gifts through Benevity or another organization like that, and it explicitly tells you this is a gift from Charities Aid Foundation of America or whatever they're going by that week. And we've already issued a tax receipt to the company. You don't do that. You can thank them, but don't issue them a tax receipt. So those are the kinds of things you need to pay attention to is make your best good faith effort to get the tax receipt to the legal entity that gave the gift, and pay attention to those donor advised funds who are telling you when not to do that. Community Foundation of Greater Des Moines is going to give you some indication when they disperse those grants, if memory serves. And then how did they give? Generally, this is most important when it is something like a donation of stock, an in-kind donation, certain kinds of bequests. You're going to want to keep tabs on that and keep records of that. So this might end up looking like one PDF per gift, or it might just be the records from your online giving form. But you want to have a way that you're keeping track of this, and that if your auditors ask for any documentation for gifts of $10,000 or higher, that you have that. So you can prove like, yep, this was just an unrestricted gift, or yes, they really did want to restrict it to that purpose. The other kind of documentation is that documentation we send to donors. We're gonna go through this. It's already, time is going so fast, so I'm gonna be a little quick on this, but there are a couple of key IRS publications, publication 1771 in particular, that talks about what you need to provide on your acknowledgments to donors. So I'm not going to read this, but it is listed there. You need to, if you're providing a benefit, you need to list that in your letter. And any gift of $250 or more, there are certain requirements to do that. So there's what the IRS requires, and then there's just what's best practice, which is to send a receipt for every donation, send an acknowledgement for every donation, and send a year-end tax summary by January 31st so that people have those documents in time to file their taxes. And that may sound really time consuming and expensive, but email is perfectly acceptable. So you don't have to go through a huge print and postage expense to do this. And a lot of software have come up with ways to do this really simply and with minimal clicks. I've got in here, and we'll have this go out, some really basic templates of how you can do this. A couple key things that this is a made-up charity with a made-up letter, getting donations from George Clooney, who happens to live in Des Moines. But there's a couple key note points. You need to have your organization's name in there. We do this a couple of times. You need to have the amount of the cash contribution. And you need to have a statement that no goods or services were provided by the organization in exchange for the gift. I see a lot of charities leave this out when I'm doing my own personal giving. Now, if it turns out, oh, and you should probably throw in the donor's name. The IRS doesn't mention that, but it just seems to make sense. You are not required to list the date of the donation. So sometimes donors get a little squirrely about, well, I sent this in December 31st, but you didn't send my letter until January, and I want to put it in last tax year. That's really not up to us. So, you can just leave that off and not get into that conversation. If they give an in-kind donation, do not put a dollar amount on that. Put a description of that non-cash contribution. So they gave you some 4th generation iPad Pros. That's all you need to put. You don't need to say that it was $600 worth of iPads. The same no goods or services applies unless there were goods or services, right? Back to that charity gala. So now we will have a description and good faith estimate of what those goods or services were that were provided in exchange for their donation. So in this case, I think it's a t-shirt that we valued at $20. They made a gift of $100, and we gave them a t-shirt worth $20. That means that they're going to be able to deduct $80 is what's deductible. And now we've removed that statement that no goods or services were provided because it's not true anymore. So review those at your leisure. There's tons of examples out there, but the key things I see people messing up on are excluding that statement that no goods or services were provided, because that is a key part of that documentation that the IRS requires, and valuing in-kind donations, not valuing benefits to in exchange for a gift. And then the third thing to think about for documentation is how are you going to find it, especially when we're talking digital. That might almost be worse than physical paper in terms of it could be anywhere. Did you save it on your desktop? Did you just toss it somewhere in your downloads? And think about the difference between, your auditors have asked for documentation to support Jessica Smith's $500,000 capital campaign donation. Which of these two sets of files would you rather look through to find it? This unnamed list of scans, or this nice and tidy list where you have a nomenclature rule. I usually like to do a date with the year first and the month and the day, the donor's name, any special restrictions or something if it's not just annual fund, and then what kind of document is it? Is it the acknowledgement that we sent? Is it the check that they sent? And that just makes it a heck of a lot easier when you're reconciling and being audited. Moving on to data cleaning. So this, make sure you've got your other pieces in order, but it can be hard to reconcile if your data are all over the place. And of course, there are additional benefits of having clean data. So in addition to making it easier to have consistent record keeping, making it easier to reconcile and comply with audits, it saves you time. Think about any time that you pull a mailing list or a donor recognition list. Are you manually cleaning that every time, or eliminating duplicates, or fixing names, or fixing donor tiers? Do you not even bother pulling it out of your database and you just have a special spreadsheet that you maintain, and that's a bit of a red flag on your database usage. And then you're going to have increased capability to engage with your donors in a more nuanced and strategic manner if you're using your software correctly. This is a visual I like to use when we think about the development or fundraising data flow. And at all of these steps of getting a gift, there is a data point that you should be tracking in your database. So there's how did you cultivate that donor and engage with them to get to the point of making the solicitation, and then you receive the gift, hopefully, and you enter the gift, and then you steward and thank the gift, and then you have your reporting and reconciliation. Every part of that process has some information that we could be tracking about it. Again, a lot of times this might just be living in someone's head. And as you grow and you want to be able to say, as the director of development or the CEO of the organization, I'm going to be focusing on these major donors, and now I need a solicitor who's going to focus on the mid-tier donors. How do I unload my brain on all the conversations I've had, their interests, what I've asked them for in the past, and what they've said no? Having that information helps you talk to your donors like you know them. So where do you really start? When I do this for organizations, I have a 200+ point assessment that I do to look through their entire fundraising database and see what's clean, what's a problem, what's not. That can take a few weeks of focused effort from a single person. So if you don't have that time to do that, here's a couple key places to start. And it's really looking at the constituent record side. Do you have duplicate records where the giving history might be split across them, where you might be sending duplicate mailings, where you might be paying more than you need to for your CRM subscription, because a lot of those are based on record counts these days. Inactive records. Are there people that you've been mailing for 10 years and they have never given to you? They are probably never going to give to you or respond. Or are there maybe people who have said, hey, I want to engage with you in other ways, but please don't mail me. Please don't call me. Please don't solicit me. You need to make sure that you are tracking that. That can actually end up with a compliance issue, whether that's do not call protections, can spam, email regulations. In extreme cases, I have worked at institutions where someone has had a restraining order against the institution, and they were unfortunately continuing to mail that person because they didn't have it flagged properly, and were able to avoid any stickier issues there. But you need to be able to respect people's requests when it comes to contacting them. And of course, it's just a waste of resources to contact people who are never going to engage with you. And then biographical info. If you just scan everybody's names real quick, do you have Johnny newsletter subscriber? Do you have, Tammy attended the gala? Or, just some of these placeholders that, heaven forbid, you have enough information to contact them and then you use that name when you contact them. Or maybe you have just inconsistent use of names. So when you go back to those public donor lists, it says Tammy ampersand Mike Armstrong, and then John and AND Robert Smith. It just looks unprofessional. Um, and then the last page of data cleaning ideas. Again, biographical information, more of that. Are your addresses up to date and consistently formatted? There are services and tools that can help you with that. Do you have people in your database that you didn't know were deceased? There are tools to help with that. Do you have emails that are never going to work because they're not listed correctly, or 7-digit phone numbers that you just can't call? um, Gift records, making sure all of those fields are populated consistently. Relationship management, are you using fields like constituencies or groups to say, here are my board members, here are my donor society members? Making sure that you can recognize their relationship to you, rather than, again, it just living in a spreadsheet somewhere or someone's brain. This helps you not leave them off the invite list. Everybody has those VIPs that they've forgotten at least once and want to never do again. If you really want to dive deep, the extra credit, find every drop-down field in your database. And what are all the unique uses of it? So for example, marital status. You probably only have a handful of those. Do you have single as capital S single and another entry as lowercase s single? That's a pretty, trivial example. But some of those are just straight up typos or issues or things that you might actually be surfacing more broadly that you want to have cleaned up. So imagine a world where you have clean and complete data. What could you do with that? You could segment your constituents based on their interests, their giving history, how they tend to give. If they're always giving online, maybe you should be emailing them instead of mailing them. Where do they live? Plan a visit, plan an event. You can design events and other touches to appeal to undercultivated constituent groups. Is a specific group giving less, and is that something that you want to change? Again, talk to your donors like you know them, and empower a growing fundraising staff to have personal connections with donors. It can be really scary for a new member of your staff to try to go talk to somebody. That new person card only lasts so long, and to avoid pitfalls that the organization, the institutional memory should have covered. You want to support that individual when they go out and have those conversations. Really quick health check. This is a little checklist you can use to say, how are you doing? What areas do you want to go over? Are your fundraising totals accurate and reconciled? Are you issuing hard credits and soft credits appropriately? That's not something we really dove into, but recognizing the legal entity versus somebody who was involved in the gift. So donors through the community foundation, you get that grant. The community foundation, that fund is the legal donor, but the family associated with that fund is also in your database. The fund gets the hard credit, the people get the soft credit. Then make sure you have that fair market value of benefits, send proper acknowledgments within a few days, and those accurate annual statements in January. Make sure constituents can opt out. You're managing returned mail, and you're just generally tracking your interactions with your constituents. Did you have a meeting? Did they come to an event? Did you send an appeal? All of that can and should be tracked in your database. Okay. I always end up having more content than I should, so apologize for flying through that at high speed. Um, if you have follow-up questions, here's all my contact info, and this is another kind of self-assessment tool that you can scan the QR code and it will ask you a couple questions and give you a result on how your compliance is doing.